A 1 crore rupees tax notice. That's what a salaried employee from Bengaluru faced because he kept filing ITR 1 even after selling a 50 lakhs property. ITR 1 doesn't allow property sale reporting. The system flagged that mismatch and hit him with a 200% penalty. Then came Aditya from Pune. His mistake seemed small. He filed his ITR a few weeks late, but that delay cost him the right to carry forward the 55,000 rupees of his losses plus a late filing fee. And another taxpayer got a notice for forgetting to report just 5,000 rupees of bank interest because the government already had that data. 3 people, 3 different mistakes. All are avoidable and all are quite expensive. Last year in 2025, 15 lakhs plus taxpayers were forced to revise their returns. This is happening because the income tax department now matches data from banks, brokers, foreign transactions, and even your overseas accounts using AI. The simple truth is you cannot casually ignore the taxes anymore. So in this video, I'll make ITR filing feel so simple. By the end of this video, you'll know which ITR form applies to you, whether filing is mandatory or not, and the real deadline, and that one mistake that triggers most of the notices. So stick with me till the end. First, who should file the ITR? Let's start with the biggest myth in India. My income is low, so do I need to file the ITR? That belief costs people money every year. There are 4 kinds of people who should seriously consider filing an ITR. First, you may have a refund waiting for you. Throughout the year, tax gets collected in your name from FD interest, dividends, foreign travel, or even when you buy a car about 10 lakhs. If your final tax liability is lower, that money is refundable. But there is only one way to get it back. File your ITR returns. Many people simply leave this money with the government because they never file. Second reason, certain transactions make filing compulsory even if your income is quite low. Some transactions legally require you to file. For example, if you have deposited more than 1 crore in current account or deposited more than 50 lakhs in your savings account or spent over 2 lakh rupees on foreign travel. And that's not all. There are few other conditions as well. Full list is on the screen. If any one of these applies to you, filing is no longer an option. Third reason, filing helps even when you owe zero tax. An ITR is one of the strongest proof of the income you can have, whether you are applying for a home loan or visa or term insurance or even a credit card. Your ITR helps establish your financial credibility. And there is another benefits. Imagine someone earns small amounts like 1 lakh rupees per year for 10 years and he didn't file his returns. Then suddenly deposit that large sum of money into a bank account. Then tax department can ask you, where did that money come from? So the regular filing creates a clean financial history. Fourth, if your income crosses certain exemption limits, filing is mandatory now. If you have opted for old tax regime and if your age is below 60 years and any income above 2.5 lakh, second case. When you are 60 to 80 years of age and if your income is above 3 lakhs. And the third case, and if your age is above 80 and you are earning above 5 lakh rupees, you must file an ITR. Now as per the new tax regime, anyone earning more than 4 lakh rupees must file an ITR. Now that you know whether filing applies to you, let's answer the question that causes most tax notices. Now we'll see which ITR form is yours. And this is where many tax notices begin. Totally there are 7 different types of ITR forms. But most people only need to understand 4. ITR 1, 2, 3 and 4. And the rest 5, 6, 7 is related to the partnership firm, companies and trust. So let's simplify the first 4 which actually matters to most of the people. ITR 1 is for simple salaried income. You can use ITR 1 if you earn salary and if you have 2 house properties and earn bank interest or dividends. Your total income should be less than 50 lakhs and you should not have any kind of business income or active stock market trading. And if you have capital gains of up to 1.25 lakh, then also ITR 1 applicable. And if the capital gain crosses by 1.25 lakh, it goes to ITR 2. Now ITR 2. The moment you sell shares, mutual funds or properties, you move into ITR 2. If you own more than 2 houses, you should be in ITR 2. And here is the most important part. It doesn't matter whether you made a profit or loss. The act of selling itself decides ITR 2. ITR 3 is for traders and business owners. This includes everything in ITR 2 plus business income, intraday trading, future and options trading, and this catches many people. Even if you have a regular salary, adding trading or business income moves you to ITR 3. ITR 4 is simplified option for small businesses and professionals instead of a detailed bookkeeping. The governments allow you to declare a fixed percentage of your income as a profit. This applies to the businesses of up to 2 crores turnover and a professionals of up to 75 lakh income. But if you also have a capital gains or stock market trading, ITR 4 usually won't apply here. Let's do a quick recap. Only salary plus interest or dividend, ITR 1. Salary plus sold any stock or property, ITR 2 is your destination. If you have trading or business income, you are into ITR 3. If you have a small businesses with a presumptive declaring of your profit, you are into ITR 4. Take a screenshot. This alone clears confusion for most of the people. Most people think taxes end after filing an ITR. They don't. Right now, the government may already have information about your salary, bank account, stock transactions, FD interest, foreign travel, and even tax you have paid without realizing it. In the next video, I'll show you exactly where to find all of it, how to claim refunds, and how to avoid notices and penalties that catch thousands of the taxpayers every year without a CA, without a confusion, without paying a rupee extra. Subscribe and I'll see you in the part 2, and if this has helped, share it with one person who it needs.